Hello everyone. This is the pre-market report video for today, 17th February 2025 for the Indian stock market in terms of Nifty and Bank Nifty. First, quickly let's look at what happened in US market on last Friday. Before their market opening, lots and lots of macros were released. Both overall retail sales and core retail sales data for the January month compared to December month declined more than analysts expected, which was huge negative as it shows the US economy is becoming fragile. But at the same time, on the positive side, because of dollar strength increase over major global currency, their import price decreased than expected and export price increased than expected. Import price drop will directly influence the future inflation in favor of market. So these two contracting macros made the US market to close mixed. Dow Jones was down by 0.37%, S&P 500 closed flat and Nasdaq was up by 0.41%. In case of VIX, it decreased to 2% and moved below 15. About oil, during weekend, there was a de-escalation in Israel conflict and also possible de-escalation in Ukraine-Russia conflict as well. So oil price dropped. WTI crude traded below $71 per barrel and Brent crude traded below $75 per barrel. If there is any future change in the status quo, we can expect the oil price to react very volatile today. I saw some news that Ukraine is not accepting US proposal kind of. So those who trade in oil, please keep tab on it. Coming to Indian ADR, as it is, Infosys dropped 0.78%. Maybe it's due to central government requested the Karnataka Labour Commission to investigate the Infosys graduate trainee issue on the Mysore campus. So arbitrage difference after factoring the dollar premium indicating around minus 0.5%. Then all other ADRs closed flat, and if you see the arbitrage, only HDFC Bank showing some negative bias, whereas Wipro and ICICI Bank showing positive bias. Reliance GDR closed negative, but it is having the negative dollar premium, so just based on GDR closing, it's showing some positive bias. However, there is one negative potential info about Reliance, which we'll discuss in a moment. About GIFT Nifty, on Saturday morning, it closed at 22,949, equating that with the spot market. For now, it's indicating flat opening. One more thing, as most of us know now, our Indian Prime Minister completed his 2-day US trip on last Friday night. The important takeaway from that is, going forward, India going to buy more defense products from US, and in addition, India going to increase their oil purchase from US from last year $13 billion to $25 billion. Last financial year 2024, India imported the oil worth for $221 billion from the foreign countries. So from US, earlier we imported roughly 5% of our requirement. Going forward, it will be 10% of our oil requirement. Here, I don't think this will be a big deal as long as India doesn't agree to sign like we will not buy oil from Iran or Venezuela or from Russia. Anyway, now it's completed and our Prime Minister is back in India. So let's assume everything went well, and if FII were selling just to influence psychological to make India to sign the deal means, then they might stop or reduce their selling in the Indian market. If that's not the case means, then they might continue. Anyway, let's hope they reduce the selling, since I think there is no point. Selling on the October-November period over the quarterly results was reasonable, since at that time on the September quarter Q2, Nifty earnings increased only by 1% in comparison to June quarter Q1. Now in Q3 December quarter, Nifty earnings increased 3.3%. This 3.3% increase on the December quarter was a decent one, and Nifty is trading only 0.5 PE ratio higher compared to 2022 May month sell-off, which was due to high US inflation and Russia conflict. So compared to last 4 years, it appears Nifty is trading at the cheaper valuation. In this coming weekend, I will try to make Nifty and Bank Nifty valuation video as most of the company's results are declared now. Disclaimer, it's cheaper compared to last 4 years. It doesn't mean Nifty will not fall from the present level. Anything may happen in the stock market. So it's just an information. Anyway, back to today's pre-market. Even on Friday in the cash market, FI was mega net sellers. They net sold for 4,300 crore rupees, but at the same time, DI net bought for 4,350 crore rupees. Then coming to the derivative market open interest analysis, first on the index option, retail traders holding a significant amount of both long and short position with a net difference 7.5% in favor of bullish sentiment or otherwise going up. On the other hand, FIIs are relatively bearish with a net difference 4.5% open interest wants the market to go down, whereas proprietary traders more of a neutral stance with a slight bearish bias. So compared to last week expiry, both retail traders and FII stable with their stance, but however, proprietary traders reduced their bearishness but still slightly inclined on the negative side. Again, that might change today if market goes up significantly. Regarding index future open interest analysis, no status change. If required, please pause and have a look. Now coming to Reliance, at present there is an ongoing conflict between Reliance and ONGC that Reliance extracted the migrated natural gas from KG D5 block area which belongs to ONGC. So ONGC demanded around 1.55 billion US dollars as a compensation from Reliance on 2013. Earlier in 2023, single judge bench Delhi High Court awarded the case in favor of Reliance. But then ONGC appealed on the Delhi High Court divisional bench that on last Friday rules in favor of ONGC and against Reliance that they have to pay 1.729 billion US dollars as a compensation. So clearly this court ruling was completely against and very negative for Reliance Industries. But maybe market might already factor those in the price, since if you see the Reliance price action on Friday, it was very volatile and I don't know exact timing of court ruling. My reservation here is all the news channels released this news only during the weekend, not on Friday itself. Either way, we can expect Reliance will be on focus today. As a summary, US market closed mixed. In addition, Indian ADR and GIFT Nifty indicating the flat opening, and this Reliance court ruling will be a bit of a concern. Moving on, as per stock open interest, Deepak Nitrite, Glenmark Pharma, BSE, Kalyan Jewellers, Adani Green and Dixon Tech got an increased open interest along with a negative close indicates the short build up. On the other hand, ICICI Bank, Infosys, Bharti Airtel, Hindustan Unilever, HCL Tech and Wipro got an increased open interest with a positive price close, which means these stocks got the long build up. Regarding the things to look out, first, before our market opening, Japan's GDP data is due. Then during our market time, there is nothing that I'm aware of, but in the aftermarket hours, India's trade data, Europe's trade data, and for US, some FOMC member speech are some of the things we need to keep an eye out today. Just for info, tonight US market will be on holiday. Finally, coming to technical, last Friday Nifty opened 60 points gap up but faced selling pressure throughout the session, but the last hour recovery helped it to recoup some losses. Still, it closed below 23,000 mark. Thus, on the daily chart, Nifty formed a bearish candlestick pattern with a lower shadow. In addition, it continued to trade below all key moving averages as well as in the lower Bollinger Band. Furthermore, RSI and MACD momentum indicators having a negative bias, all indicating weakness. Hence, a decisive fall below 22,800 could trigger further panic in the market. On the higher end, 23,100 is the immediate resistance, above which the market may see some relief rally. In case of Bank Nifty, it opened 130 points gap up. However, similar to Nifty, it also had a volatile day and closed near 49,100. Thus, on the daily chart, similar to Nifty, Bank Nifty also formed a bearish candlestick pattern with a lower shadow, which is not good. In addition, Bank Nifty entered the lower Bollinger Band and trading below all key moving averages while forming the lower high lower low formation. On one positive note, Bank Nifty managed to hold the weekly support level 48,700. Hence, sustaining below 48,700 could trigger further downside towards 48,000, while 50,000 remains the key resistance. On the options front, the maximum call option open interest was at 24,000 strike, followed by 23,300 and 23,500, with maximum new call option rating at 23,300 strike and then 23,900 and 23,800. On the put side, the maximum open interest was at 22,000 strike, followed by 22,500 and 22,400, with maximum new put option rating at 22,500 strike and then 22,100 and 22,800. Thus, from options data, 22,800 to 22,700 range expects to act as the immediate support, while the resistance is expected between 23,200 and 23,300 zone. So, So that's all in this video. Hope you all got some information. Please consider subscribing the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.